As of the close of market on August 6, 2026, at 4 p.m. Eastern Daylight Time, the market is closed, and NUBURU Inc., trading under ticker symbol BURU, finished the trading session at $0.056 per share. That represents a drop of 12.16% during regular trading hours, with daily volume reaching approximately 6.47 million shares. Most retail traders looking at their favorite stock tracker or flipping through the Robinhood app might quickly write off a micro-cap stock trading at nickel levels as a lost cause destined for total erasure. But if you take a step back and examine what is actually happening behind the scenes, you discover a deeply fascinating story about industrial technology, severe balance sheet restructuring, and massive equity dilution that most casual onlookers completely overlook. The mainstream expectation surrounding NUBURU stock is simple. Retail investors browsing investing sites often assume that when a small technology company drops into the single digits of cents and faces exchange delisting warnings, the underlying equity is essentially worthless. The popular narrative suggests that a business losing value so rapidly is merely spiraling down toward zero without any meaningful operational activity beneath the surface. However, the reality of the situation tells a far more nuanced and surprising narrative. Behind that suppressed share price lies a company actively pulling drastic corporate levers, executing tens of millions of dollars in capital raises, wiping out substantial legacy debt burdens, and executing a major strategic acquisition in international defense and industrial equipment. If you examine recent market sessions on platforms like Interactive Brokers or through an individual brokerage account, NUBURU has experienced extreme price swings that highlight how intense trading interest remains around this stock. In mid-July 2026, the company announced a massive $38 million public offering, priced at approximately 15.5 cents per share, which represented a substantial premium to its prevailing market price at that time. Shortly after that capital raise was finalized, the stock saw wild volume surges exceeding 10 to 20 million shares in single trading sessions. Many active accounts engaged in Robinhood stock trading and self-investing noticed sudden spikes in turnover as day traders reacted to major press announcements regarding corporate restructuring and debt elimination. To understand the underlying mechanics driving this price action, one must look closely at what management did with that capital injection. NUBURU directed a large portion of those funds toward completely extinguishing $16.75 million in outstanding indebtedness, while simultaneously moving forward with an agreement to acquire a controlling 70% stake in Tecne SPA, an Italian defense and technology provider. In fact, Italian authorities cleared the acquisition structure, opening the door for NUBURU to expand its footprint across defense electronics and counter-drone systems. For investors utilizing Fidelity brokerage or checking positions on the Fidelity mobile app, this represents a sudden pivot from a pure optical laser hardware developer toward a broader industrial and defense equipment vendor. Yet, despite these aggressive strategic moves, market prices continue to reflect severe downward pressure. Why is there such a sharp disconnect between the company's headlines and its stock performance on active trading platforms like SoFi Invest or Schwab Intelligent Portfolios? The core reason comes down to the sheer volume of newly issued equity and the lingering structural overhang from its stock exchange status. In mid-July 2026, NYSE American commenced delisting proceedings against NUBURU, pushing its shares toward over-the-counter quotes and secondary exchanges. When a security transitions away from a major national exchange, institutional investors who follow strict mandates often must liquidate their holdings, creating heavy selling pressure regardless of long-term commercial developments. When individual traders use an intelligent portfolio tool, invest online, or check market news across Fidelity Wealth Management updates, they often see penny stocks like BRU fluctuating by double-digit percentages in a matter of hours. The daily swings in NUBURU are no longer governed purely by conventional valuation metrics like price-to-earnings ratios, which remain deeply negative given the company's historical operating losses. Instead, trading activity is driven by micro-cap liquidity dynamics, short-term retail momentum, and warrant execution risks. Every time fresh capital is raised through share offerings, existing equity holders face significant dilution, which caps upward price momentum even when positive operational milestones are announced. Comment below how many shares of NUBURU stock you currently hold, or whether you believe ultra-low-priced penny stocks trading below 10 cents belong in a modern growth portfolio. Hearing how different investors approach high-risk microcaps always provides valuable market perspective for the community. Now, to properly evaluate whether the current price level represents an extraordinary value disconnect or a permanent value trap, we must review what NUBURU actually builds and where its core technology fits into the global industrial landscape. Founded in 2015 and headquartered in Colorado, NUBURU established itself as an innovator in high-power, high-brightness blue laser technology. Unlike traditional infrared lasers, which are heavily absorbed by water or reflected by highly conductive metals, blue laser light is absorbed up to 20 times more effectively by metals like copper, aluminum, and gold. This physical property allows manufacturers to execute cleaner, faster, and more precise welds without creating thermal defects or microporosity in sensitive components. This specialized blue laser technology addresses critical needs in electric vehicle battery manufacturing, consumer electronics packaging, and advanced additive manufacturing or three-dimensional metal printing. When major automotive manufacturers build electric vehicle battery packs, joining copper tabs efficiently is a central production bottleneck. NUBURU's systems like the NUBL-BL and AO150 were designed to process these conductive materials at dramatically higher speeds than standard industry solutions. Beyond EV batteries, the company recently expanded its product testing into security and defense applications, demonstrating blue laser dazzlers designed for counter-unmanned aerial system platforms, tapping into a multi-billion-dollar market for defense security hardware. However, historical financial reports illustrate why the stock found itself in such a precarious position before recent capital maneuvers. Over past fiscal cycles, NUBURU struggled with low commercial revenue generation relative to its operating expenses and cash burn rate. Annual revenues remained modest, while net operating losses accumulated over time. For investors managing portfolios on Fidelity Investments, checking Fidelity IRAs, or reviewing SoFi active investing accounts, financial statements revealed a persistent cash shortfall that required continuous financing rounds. That balance sheet distress ultimately led to heavy debt accumulation, supplier pressure, and severe stock price deterioration over the past 2 years. This brings us directly back to the tension between investor expectations and current operational realities. The general expectation among market skeptics is that NUBURU is an over-leveraged technology company that ran out of runway and will continue diluting shareholders until equity value is completely wiped out. The contrarian reality shows a business attempting one of the most aggressive balance sheet turnarounds in recent microcap memory. By extinguishing its major debt obligations and acquiring Techne SPA, management is attempting to immediately transform its revenue profile, merging its proprietary optical engineering with established defense contracts and manufacturing capacity in Europe. Looking toward future outlook and potential market catalysts, several key variables will decide whether BRU stock can mount a sustained recovery or remain locked in volatile penny stock status. The first major catalyst is the full financial integration of Techne SPA once the transaction reaches final closing. If Techne's revenues and existing order backlog can be consolidated onto NUBURU's financial statements, it could instantly elevate the consolidated entity out of the pre-revenue tier and establish a foundation of recurring commercial cash flow. Investors tracking options or stock quotes via Interactive Brokers platform or using Robinhood Investments will be watching upcoming quarterly filings closely to verify whether top-line numbers reflect this operational transition. A second critical factor lies in commercial adoption of its defense offerings, particularly the Blue Laser Dazzler technology for counter-drone applications. As global military demand for counter-UAS hardware accelerates, securing actual procurement contracts rather than just initial testing validation could serve as a powerful operational driver. On the flip side, major risks remain prominently on the table. Over-the-counter trading environments generally bring lower liquidity, wider bid-ask spreads, and reduced visibility among institutional fund managers who utilize Fidelity